markets are volatile. Earnings from Samsung just came out, and this is what just happened. The expectation was quite high, but the operating profits are down 95% year over year, and they just missed the earnings by 50%. That's actually a huge thing. Now, this happened before, back in the great financial crisis. So, what are we looking at? Short term, the market shows you it's dropping, it's volatile, it's moving up and down. But now let me take on the macro scenario, at least last 5 years to a macro. What are you looking at? It does show you that yes, we have the volatility here, but it is more or less showing you we are going for a run to the upside, whether you are looking at it on the macro or like one business cycle, right? Now we take the same perspective come in the crypto market. What do you really see? Yes, I agree on the perspective that Bitcoin has not done anything for last 3 weeks. We are just ranging. But what about XRP? What are we looking at in XRP on the short term, on a medium term? This is a daily chart. It shows us some things are interesting. We need to understand that. And the market as a whole gives us some ideas. Welcome to the Scientific Investor family, where the normal retail guys learn how to become the next top 10% of this world. Right now, the XRP is showing you different daily candles, which actually reliably give us some information. One, we got a hammer, which means it usually shows a local bottom. Great. Followed by that, we got an inverted hammer, which actually again shows a local bottom. Whenever that comes in, you usually get a bounce. So that is the local bottom, right? You got an engulfing candle, you went up. You got an engulfing candle, you went up. But when you came back down, you clearly showed an inverted hammer. Now, this is short-term view of the market. So when you're looking at that on zoomed in view, you also need to understand like, okay, yes, that's a daily chart. We can either go to a 4-hour chart, look for the micro scenario, or we can zoom out and look at the macro. Now, one of the things which we usually do is we look both. This is the 4-hour chart of XRP, and it does show you like, okay, we broke to the downside here. That does not look really good. We wanted that level to hold, bounce, go up. That did not really happen, but the market actually showed us the fact that it actually dropped. Then it retested and got rejected. We made a new low of 0.49. After which we bounced, retested this range. But again, we got rejected. But now, this time what we have to understand is we are not actually making a lower low directly, even though we got rejected, like this one. Which actually shows us like, okay, there is a possibility that this can be an ABC move and we may start the next leg to the upside. So that's trying to be positive, looking at what the market is showing us. Not what we want, but what the market is showing us. So we actually go on a macro chart because we really need to understand what is happening on the macro. And the macro just shows you like this is nothing. Compared to what we just saw, the rally from 0.355 towards 0.58, now we are consolidating in an inside candle. Now, what does that inside candle really mean? Because a lot of people did not actually care about these price actions, but we do understand the fact that when we got this inside candle, we talked about that possibility of a continued run to the upside. Yes, it was delayed 3 more days, but eventually it came out. So the light comes out. Wherever you put the light or truth, it eventually comes out. Like that, the price action showed us what it's about to do, and we saw that coming. Now, when you actually slow down on this, go different time horizon and look at the market structure, it kind of shows you like, there is some trouble on a 3-day chart, right? So now the one is like a bearish engulfing candle, which is not positive. Then an inverted hammer. So it's confusing, right? So on a 3-day chart, majority of the viewpoint should be focused on what's the next support. We are going down, right? And that would be somewhere here, 0.45. Now remember, you had a wick here at 0.43, so next support being 0.45. That's completely cool because you still maintain the trend of A, B, C going up, which is actually a great thing. Wave 1, wave 2, wave 3, whatever you call, that's the structure. Now, on the daily, we understood like, okay, we are having a correction. We may actually, the price action shows like, okay, bulls are entering, but the higher time frame structure shows, okay, we still have some correction. So that's why we are looking at the range of supports. So now we go on a macro, which is our weekly chart. Even if we come back down towards, say, 0.47, that still is a major support on a weekly. So the 3-day chart showing you 0.45 may not happen if the weekly structure is being held. Now again, we go on the macro, which is a monthly chart. The monthly shows us 0.47 is more or less the support. Right now it's at 0.5. We already have visited 0.49. So the next leg down can be close to 0.49. Unless we break this trend line on the short-term pattern and start moving higher. So the first trending line is this, and the horizontal range of resistance which we want to see the price breaking to the upside is here. But right now we are making a lower high on this time horizon, so the chances for that is much lower. So that's assumed in view. Now you go on the RSI part of this. We want to get more clarity about what the RSI is showing us, and the RSI even after this consolidation is still above this resistance, which is actually a positive factor because you come back down, retest this and then bounce. But this is a weekly chart, so you may need a lot more patience than you expect because the market can be irrational, right? Here we are looking at the altcoin market, which suggests like, okay, the altcoin market which is showed here is against the dollar. Dollar may have some issues. If dollar drops, crypto goes up. Now that kind of accelerates the movement to the upside. But you have a lot of different thought process in the market. Say Real Vision, one of the reputable guy, and I kind of, respect for what he is. Raul actually comes out and give you the idea like, okay, we are getting this thought process, but he thinks dollar is going to stay as the reserve for a very long time, or at least for the near future. And while he explained the same thing, he also come out and talk about regional reserve currencies, and that's where I have some issues. Say for me, I'm thinking like, okay, if you look at the debts held by India, China, Russia, all these new world, they are now thinking about why are we holding dollar? If they can seize your dollar, saying no, we don't agree with you on that political view, that means it's not safe. Basically, that's what they did with Russia, right? So on a financial standpoint, it makes more sense for you to hold gold or another country's currency. So holding the bonds of US is much more riskier for them because they may not give you the coupon payment for that. They may not actually give you the interest rates, right? So the dollar is becoming more riskier. And these people are like, okay, I don't like that being used as a weapon. So if the trade in that region is going off, that's one blow. Two, if Saudi, Russia, and these energy countries, they sell the oil in yuan, in INR, that's not a good thing to see for US dollars. And it's when you say regional reserve currencies, you kind of minimize this to China, India, Russia in that particular zone. But in reality, that's not what's happening. The truth is a little bit beyond that. Now, what do I mean by that? This is something interesting. If it's just a regional stuff, you're talking about the China, India, Russia, Pakistan, Bangladesh, Sri Lanka, it makes sense, right? It's a regional thing. But it's not only that. You see it getting extended towards Singapore. You get Europe inside this. You get Malaysia. You get New Zealand. You get United Kingdom. So what are they talking about? That's something you need to keep in your head because they are now talking about these nations and the banks in those countries. Banks in 60 cases for opening SBRAs of banks from 18 nations. So that's settling payment in Indian rupees. So if now they want to do the payments, they're going through the US dollar. Now they are not going through that route. They're jumping on in between the domestic ties and then expanding that domestic tie into an international one. So the rupees payments, which was like the UPI, is now going into Malaysia, Singapore. I mean, it's getting abroad. So it was a domestic stuff. Now it's an international thing. So if you are about to do trade with a country like this and going on to all these different nations, that's just the case of INR, which is Indian rupees, right? Then you see China, then you see Russia, then you see Saudi. I mean, these guys are actually selling energy, the oil. Let it be for the Europe, let it be for other parts of the world. And it kind of gives you one thought process. Okay, the Nostro Vostro accounts where you hold money, they wanted it to be in dollars before. Right now, things are changing. What is changing? Once effective, keep that in mind. Trade in rupee dirham will be conducted through Vostro accounts of banks of two countries. If you are that guy who says dollar is going to stay big boy of the world, you may have some issues here, because if these countries right now have a Nostro Vostro account and they're keeping in, their currencies, now they are going to reduce whatever they have in US dollars. They'll only keep dollars to trade with the dollar partner US. And if you look at the population of the world, it's focused in India, in China, in Russia, in Pakistan, in Bangladesh. So you have this region and the Middle East where a lot of these people are working. So now that's actually a macroeconomic situation where this does not actually go well. But what I'm saying here is, if they are ready to trade in their own currencies, they don't need a reserve currency. They are not relying on a reserve currency, which means even if the US says we are the reserve currency and some of other partners use that, majority of others are not going to do that. Which actually means all those central banks, they don't want to hold the US denominated debt. They're just going to dump those as soon as they can. Which again means that is going to come back to where? The domestic US economy. What does that mean? The supply of US dollar inside US increases. Because when they sell, unless someone else buys it to another foreign country, it's coming back to your home country. So the supply of that currency in your domestic economy increases. And what happens if you are the US? Inflation goes back up. So at that point, the central banks will come out and they're going to hammer the economy with higher interest rates. When the economy is going through the drains, they're going to push that. They're going to kill the economy one way or the other. And when the interest rates are going sky high to kill the inflation, automatically what's happening right now in the country is going to kill this. They are going to sell these banks. And while you look for the real thought process and people like these who have some credibility, I mean, big guys like, Jim Rogers and other investors who have been there for a long time says, this guy is one of the central bankers who they think has a reliable thought process. So I'm looking at this guy and saying, okay, this guy is giving the thought process. Banking system is headed for something like this. And we all understand, okay, that's coming. And if that's focused more or less in US banks are going to have issues, which actually means people are going to take their money out and run out of that banking system. So in short, if you are in cryptocurrency right now, which is denominated against dollar, understand the fact that crypto is about to go up. We all know the fact that the market is showing us a key idea, which is a reversal signal. And when the market is going up here in crypto and dollar is dropping there on that side, the upside for you is asymmetrical. It's like going through the roof because you get both sides, right? It's like the best of the both worlds. And at the same time, if you're moving this into assets denominated in other currencies just as soon as you exit, they are strengthening. Now that's like, a lot of different factors coming into play, but you have to keep in mind, you have different structures where you need to understand if you're taking profits and you're thinking to hold those assets, where are you going to hold? Let it be a stable coin, whatever it is. Look for what that stable coin is backed by. If it's backed by the bank deposits in a particular currency, i.e., that's going to be really bad if that currency is going to get hit hard with the drop in dollar. That should be concerning. meaning you made a ton of money in dollars and you're keeping that in dollar-based coins, they get hammered. Hey, that's not a good thing to think about, right? When you actually think about that, okay, something based on gold is going to be okay. Something based on gold, silver, whatever is going to be okay, because dollar drops, meaning central banks are buying gold like crazy. I think 52 ton was that what they bought in the recent quarter, and last year I think they bought like 400 tons, which is one of the craziest gold buying, shopping, madness by the central banks after 40-50 years. Now that does mean they are preparing for something which the normal average guys are not ready for. So if you are on the side saying like, okay, I want to get financially educated, I want to know what the hell is happening in the world right now, and I want to be prepared for this, these are the key points you need to know. Dollar is going to get hammered for sure. If you are in assets, the value you get there is going to go up with the drop in dollar. But if the value is based on the utility, is based on real life, that means the upside is now enormous. One of which I think is going to be XRP. Now, the level of patience you need to see here is going to be different. If you are looking for a $100,000 XRP, I don't know how long you have to wait. But if dollar drops dead, then that may come in like 90 days, just like the other guy Balaji was saying. But I don't think that really is going to happen, because we know what happened with the GBP. When that moved out of being a reserve currency, it didn't die, right? It still had its place in the world, somewhere in a corner, right? So that still will play out. So for example, if you have a dollar, which is 80 rupees right now, it may drop to like 40 to 50. So that's like being cut in half with your purchasing power towards India. So those billionaires in India, based on their US dollars now, will feel the pinch, right? Unless they move everything into the INR right now and then move back into the US, you just doubled your money, right? So it kind of literally is at a point where you have to think twice and then sit there, do your research, understand what the hell is happening in the banking system right now and with your money, your purchasing power. So guys, if you received value for your time, please do hit that like and subscribe button if you haven't done that already. I'll meet you guys on the next video. Bye for now.